So is investing too risky? Well, in this video I'm going to talk about what is risk, what are the risks involved with investing and not investing for that matter, and also what we can do to mitigate the risks of investing. Welcome back to my channel. My name is Euan, and on this channel we talk about personal finance and investing in the stock market. So if that's something that tickles your fancy, then hit the like button and why not subscribe as well, because it really helps out the channel. But just remember, I'm not a financial advisor, I'm just a random dude on the internet, so let's go. So before we go anywhere, we need to understand what risk is, and more suitably, what is financial risk. So financial risk is the possibility of losing money on an investment or a business venture. So that's pretty self-explanatory in my opinion. But obviously there are different levels of risk. For example, if you decide to invest your money into the hole in your mattress, then that's going to be different risk to investing in the stock market. But there's obviously risk that your house might burn down and you'll lose all your money. But anyway, let's think about it a little bit differently. So what is the risk of not investing in the stock market and, for example, leaving your money in your mattress or in a savings account? So if you do decide to invest your money into your own mattress, and by that I mean not actually buying a mattress, but that is also a good idea because you do spend 30% of your life on it, so you might as well have a good one, a nice comfortable sleep. But anyway, I'm getting distracted as always. Obviously there is zero return and there's no return on investment by putting your money into your mattress. So obviously this is a stupid example, but it's just to illustrate a point. So you would think that leaving your money in your mattress would have a 0% return. Well, this isn't actually the case because the ONS, or the Office of National Statistics, they calculated that since 1989 all the way up to 2020, that the average rate of inflation was 2.5%. So if you're hoarding your money like my intern, then you're actually losing your money.
Oi. What are you doing, mate?
I'm saving cash. Investing my cash.
Who do you think you are? Walter White? You're just losing money due to inflation.
This also applies to regular savings accounts as well. So as of today, the max interest that you'll get on a regular saver is 3%. So you're actually only making 0.5%. So do you know how long it would take to double your money at 0.5%? Well, here's your answer. 144 years. So unless you're Joe Biden, then you're probably not going to be living that long. So although saving in a regular saver has almost no risk, there is obviously a risk of not making very much money. So personally, that's a risk that I'm not really willing to take, especially when you need that money to retire, and I don't plan on saving all that money myself. So I'm not saying don't use savings accounts, and I'm not hating on them because they do serve a purpose as emergency funds and short-term savings accounts, but for long-term, think about it this way. Banks use the money in your savings account to invest for themselves. So if the banks are willing to pay 3%, how much are they making to make a profit on that? And obviously they've got their fees and stuff like that. So let's round it up to 4%. So they have to make at least 4% to make a profit. So how are they doing that? Well, they're investing the money. So think about it. Would you rather the bank makes money or you make money? You and I make money. I know which one I would choose. So what is the real risk of investing in the stock market / real estate or whatever you want to invest into? So the main risk to investing in the stock market is that if you put your money into a stock or a company and that company fails because they go bankrupt and can't make any profit, then you lose that money. Or perhaps you wanted to invest in real estate. Property can often be seen as less risky if done correctly, but in my opinion it does require more money to start investing into it, and the risk of bankruptcy is higher if you fail to make payments for your mortgage because there's a lot of leverage involved with buying a house. Obviously it does differ if you're buying your own house or a rental property. And probably the most risky part of investing is if you get drawn into trying to trade CFDs or options trading or just anything that's short-term gains. These often also require leverage, so you can end up making a lot of money really quickly, or you can lose a lot more than you actually invested. And for me, I feel there's a lot of risk which I can't handle, my ticker can't handle. So how do we mitigate these risks and prevent us from making a mistake and investing in the wrong thing and losing our money? Well, all we have to do is follow Warren Buffett's #1 investing rule, which is don't lose money. Obviously, while this is true, wise as be, it's not the most practical advice, is it? But this is. Step 1 is to avoid short-term gain products, so CFDs and trading and options trading and trendy stocks, because there's a lot of hype that goes around all these things where you can make a lot of money really, really quickly, but just stay clear, because personally I'd rather be guaranteed rich in 20, 30 years than guaranteed broke or nearly guaranteed broke in 2 or 3. Step 2 is to diversify in some way, even if that means reducing your gains a little bit. So whether that's investing in ETFs/index funds and or just creating a portfolio that's well diversified rather than just investing all your money into Tesla, could go wrong. Or you could do a combination of real estate investing, and stock market investing, and other assets that you can find, crypto, blah, 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 all of these other things. And step 3 is to invest for the long term. I personally think investing for the long term is the most important thing, and this is why. Well, Nutmeg did a study, which I'll link in the description below, where they looked at stock market data between January 1971 and May 2020. They concluded if you picked one random day and invested that day, you'd have a 52% chance of making a gain. However, if you'd invested for 65 days, then that would have increased to 65%. And if it was 1 year, it would be 71%. And for 10 years, it would be 94%. And the real kicker is if you invested for more than 14 years, then you would never have lost any money. You'd make a gain if you'd invested for 14 years. So this is why investing for the long term is so important. If you invest for more than 14 years, you will not make a gain. And as you can see by the research, this shows that long-term investing dramatically increases your chance of making a gain. And even just a few weeks considerably improves your performance of your portfolio. So is investing too risky? No. There is risk, of course. There's no denying that there is risk when investing in the stock market or investing into real estate, but there is also risk in crossing the road. There are going to be riskier roads and there are going to be safer roads, but it also depends on the person. If you're my age, then you're going to cross riskier roads than an old granny, for example, because their risk tolerance, their risk preference is different, and this is going to change your attitude towards risk and whether you decide to cross the road without pushing the button. And to finish off, the last quote that I'll say is this: short term equals risky, long term equals not investing is the risk. Anyway, thanks for watching. Hope you liked the video. Please like the video if you have, and subscribe and comment. And don't forget, I'm still doing this Movember, if you can really see. So I'll leave the link in the description where you can donate £5 and be entered into the £100 giveaway. We're at £50 at the moment, so that's good. Thanks to anyone who's donated, because it does go to a good cause. And all there is left to say is I'm not a millionaire, but I'm trying to help you become one. So peace. So you would think that putting your money into your mattress, and the risk of bankruptcy, and the